Good afternoon, everyone. I'm Stacy Scott, and I'm here with Graham Wickham, President and CEO of Wickham Financial and Insurance Services, and we're back with you this afternoon for our weekly wrap-up. Graham, what can you tell us about what happened in the market this past week?
Yeah, thank you, Stacy. Yeah, we saw a pretty narrow range, not a lot of direction one way or another for the market. So we saw the S&P, the Nasdaq, the Russell 2000 all gain less than 1%. And the overall breadth of that market was just generally mixed. Now, we did see energy pull back about 3%. Crude oil slid about 4+%. So per barrel dropped to about $71 last week. And that was off of Saudi Arabia and Russia trying to lobby OPEC members to join the output cuts to possibly no avail of yet. We did see gold prices really retreating off that all-time high that they recently hit, off about 3.5%. If we look at some economic numbers, we saw the unemployment rate tick down to about 3.7% from 3.9%. So maybe that's going in the direction that we don't want for the Fed to start easing. But it's too early to say that they would be disappointed in that. I think it's more the wage growth numbers, because that came in flat, but it still remained pretty elevated, about 4+% year over year. And I think that's the number that the Fed really wants to have an extra eye on to see if that's heating up, if that's starting to moderate and come down. So we did see some softening starting to emerge in those numbers. We look at job openings, that fell to the lowest level since early 2021. Now, that could be a precursor to increased unemployment. And I know that sounds horrible, but I think that's kind of what the Fed wants. They want to see some softening in the economy, and that might come through a higher unemployment rate. If we think about optimism was kind of softening, or the perception of a softening landing or a soft landing seems to be prevalent in the market. If we look at the consumer credit growth slowed to about from 3% to 1.2%. So the willingness of households or the consumer to spend more, to take on more debt, has been slowing, even though they have been increasing some debt out there. If we look internationally and kind of go overseas, we look at China's economy suffered another blow. Moody's came out and issued a negative outlook, warning basically on slowing growth and increased debt burden. If we look at Japan, their yen really rallied sharply last week on Thursday after their central bank hinted that they were shifting away from maybe a negative policy for interest rates. If we look at the central banks over in Australia and Canada, they left rates alone. I think they were really feeling that maybe they've done enough, or just wait and see the effects of what they've already done in terms of tightening. And poor old Germany, I mean, they're still seeing some factory orders down about 3.7% month over month. Remember, they're more of a manufacturing economy, and they're feeling more of that blunt, that recession compared to overall Europe.
Okay.
Yep.
Well, Graham, you mentioned that the Fed is meeting this week.
Mm-hmm.
What do you expect to see coming out of that meeting?
Well, not much, to be short. I don't. I think the Fed is not going to show the cards, right? So they're playing poker right here. Yeah. And they don't want to get anyone overly excited, even though the market is obviously anticipating that they're going to pause and start to cut. I think they've already signaled a pause without saying it. So I don't think they're going to do anything. But the market could be a little ahead of itself in the very short run, anticipating rate cuts too soon in 2024. We'll just have to see how that shakes out. But it's been a great year in the market for a certain group of stocks and a certain group sector like tech and AI focused, with a whole swaths of the market being left behind. So I do think we're going to start to see a broadening out. We've already started to see it. I think that will continue going into next year. And then we'll wait and see how the economic numbers pan out.
Okay. Well, thank you so much for that information, Graham. And thank you to our viewers for joining us this afternoon. We hope you have a great week, and we will see you again next time on the Weekly Wrap Up. Take care.
Take care.